Hi, this is Joseph. This is a quick update. It is Wednesday, June 14th, 2017. We've got FOMC out of the way. Early this morning, we were trading some economic data out of the US, and it's been a pretty interesting day. As you can see here with this 4-hour chart on the euro dollar, go ahead and open up this chart one more click. You can see the complete reversal. It really wasn't going anywhere. And it was pretty obvious once FOMC was out of the way, just before we were heading into it, how it was behaving. So I'm going to show you the trades that we took today with the trade copier. We earned approximately 92 pips today with the trade copier. Now I will start off over here. I'm going to bring the trades from this morning. This was this morning during the New York trading session. So this is the euro dollar 30-minute time frame, and initially we had this trading range right up here with this high at approximately 1.1230, right around that level, and then that support low here, sort of a tweezer bottom. This is a 30-minute chart, and that low was at 1.1184. So this was my range of consolidation. And as I've said very often, I won't trade inside of choppy, price action like this, where you really can't tell where it's going to go. And sometimes you can tell that it might be hitting a resistance point, like the area where I'm moving my cursor now. You can tell that it's hit a resistance point and it's probably going to drop down, and that's okay. But the problem is that if you don't have a very precise target that you can repeat this particular pattern or trade all the time, at least this is the way that I do it. Some people obviously don't care and they do it. They have another strategy for doing it. That's okay. There's so many different ways to trade. But the way that I do it is that if I get into a trade on a reversal signal pattern here, let's say on this 30-minute, you can see this evening star pattern setting up here at resistance or an area of resistance. The difficulty sometimes is that when I've been doing this for many years, and when I track these trades like this, it does not always cover the same distance every time. So when that candle closes here on a 30-minute time frame, that close was at 1.1212. Now the low just before the news was released this morning ended up going as low as, let me see if I can grab that price low here. Be faster if I just do it this way. The low was 1.1196. So it really wasn't that far. And if I was targeting a trade like that, I would try to get 20 pips. And the reason is, where's the stop? So these are the things you have to calculate before you get into a trade. You have to take that into consideration. At least I do. And it makes my ability to always find the best trades, the right trades, and to eliminate the losing trades, to weed those out, to get them out of the way, to not execute when it doesn't look likely to work out the way I expect it to. You have to ask, where's your stop placement if you get into a trade? What kind of a stop loss are you going to use? How far do you expect the price to continue down before you can hit some kind of a profit target? What is going to be your profit target? And if all you're doing is just scalping all of the time, well, chances are if you're just going to take 5, 6, 7 pips, but your stop has to be above that price swing high up here with an entry of 12, that high up there is at 24. So it's not too bad, but sometimes it can be a little bit worse. And if we go back over here to the initial price swing high that I was using as a stop loss earlier in the day, that was 1.1231. That wasn't my stop loss. I'm sorry. That was my resistance point. So there's a few things to consider. As it's testing this, if it would have turned around and gone back up and taken out the high here of that candle that set up the evening star pattern, the next likely situation that most traders will find themselves in is what do they do now? Do they continue to expect that price is going to come back down? There's all that manipulation in your mind. I know because I went there. We all know how it goes. The psychology behind trading. So you start looking for the next level of resistance, and then you find the 31, and then you say, okay, well, if it goes above 31, then I'll close it out. And there's really no reason to do that anyway. You've got to find the opportunities when price is more likely to move in your direction and in your favor anyway. That's one of the ways to minimize the possible retracement and the possibility of getting stopped out. So that means you have to be very particular about when you execute these trades. You can't just be firing off trades all the time. At least that's the way I look at it. That's the way I teach my trading course. That's the way I teach my system. And that's the way I trade personally. I'm not going to take trades all of the time because sometimes they'll work and then sometimes they'll come around and test if it's going to take a little while longer before we go into some economic news. Nobody really knows for sure. The only time we know for sure is when there's news that's sufficient enough to cause a reaction in the marketplace. And that will sometimes give you a trade signal and an opportunity just before the news. You get those technical signals, and then sometimes you have to wait until after the news is released. So I stayed away from trading all of this inside of this range here, and I didn't execute here, but I waited as we approached that U.S. economic data this morning, realizing that with the FOMC later in the day, they were probably going to take that information into account, or were they? I knew that that was going to be what the market was going to speculate on, and that would also cause a bigger reaction. If there was going to be an opportunity to trade after the U.S. news, and some people stayed away from it, then they're going to wait until FOMC and trade that one. Traders come to trade and they expect to find a trade all the time, especially inexperienced traders. They're always looking for trades. But the experienced traders realize over time that it's better to take a select few number of trades that you know will always work. They'll always hit their target. And you get to understand economics, the calendar, everything that's involved, the political scene, all of that has an impact and can tell you when you should be trading and when you should not be trading. And of course, sometimes even professional traders, they're going to miss an opportunity. It just happens. There's something that just really nobody can explain or nobody could anticipate, and it surprises the market. And you miss an opportunity to trade, but you're always going to get another trading opportunity. You just have to wait for it. So that's what we did today. We waited for that. And this was also a fade the double zero. Now, I don't talk about the fade the double zero trade a lot. I do teach it in my trading course. I don't talk about this particular strategy very often, but it is an effective trade strategy, and it works for at specific times in specific market environments. This was one of those prime opportunities where price went down. I'll go ahead and use the crosshairs and I'll explain how I did this. So here you can see the 1.1200 level right there where I have my crosshairs going across the screen. This is the 1.1200, that horizontal line right there. So at that point, price had dipped down and through the psychological level, the double zero, the 1.1200, and then turned around and went right back up. Now, the target for me every time I execute this trade is always going to be 40 pips from the double zero. So if we expect price to go up, then we're going to target, if it's 1200 was the psychological level, then the target's going to be 1240. It's always 40 pips from the double zero level. Our entry this morning was 1.1203. It was a little bit of slippage, but 1.1203. And you can see that this pushed price straight into, as a result of the U.S. economic data, into that 1.1240. Now, it did go a lot further. It went a lot further. We can scale out. I highly recommend, and I teach in my trading course, to scale out of positions like this. But with the trade copier, I cannot scale out. So I have to take one trade, close it at one target, and that's the end of that trade. But the way I teach my strategy, if you want to learn how to actually scale out of positions, which is actually what I do in one of my own accounts, and I highly recommend if you get the opportunity to do so, learn how to do this in my trading course. You can scale out at that first target, which is going to hit, and then you scale out at psychological levels beyond that, and you trail the trade. But this doesn't always happen. Again, it could have just hit the 1.1240 and gone to 12, maybe 43, and then stopped. Anything could have happened here. That's why we always take profits. I always recommend taking profits, sticking to the plan, sticking to the rules, get in when you're supposed to, and take profits, and then reset and wait for the next trade opportunity. Now, this is what happened before FOMC, and this is what happened during the U.S. economic data. This is the euro-dollar 30-minute time frame. I want to show you the dollar Swiss. We did the same thing in the opposite direction with the dollar Swiss 30-minute time frame. This was with U.S. economic data, and obviously if we're trading the euro-dollar up, we were going to short the dollar Swiss. The dollar took a pretty big hit this morning, and obviously since has recovered, but we're looking at an entry, again, a fade the double zero trade. This high here was approximately 97.10, 9700 right here. That's the psychological level. That's that double zero. So price went through the 9700 to 10 and then turned around and came back down. And remember, if we're using the fade the double zero trade, if we're going to sell it, again, it's 40 pips from, the target is 40 pips from this double zero level. So that would be 60. That was our target. So we entered at 97.03. This one gave us a better opportunity, a better fill. and we closed the trade at 96.60. This earned approximately 40 pips selling it, and the euro dollar earned approximately 40 pips buying it. Again, a 40 pip target on this one, 40 pip target on the other. Now, after FOMC, it was a bit volatile. You can see that spike right after FOMC. This was just a short time ago, maybe about an hour and maybe 15 minutes ago. And price spiked up. We waited for the price to clear out of the way, give us a better opportunity. I know that some platforms freeze up on some people when they're using MetaTrader 4 or other brokers. Sometimes they'll freeze that price feed on a big event. So I waited a few minutes and then was able to get into the trade at 1.1253. And we took it, and I just picked up an extra 12, 15, 13 points here, approximately, from let me get that number there, 1.1253, I'm sorry, to 1.1238 is where I closed the trade. Obviously, it dipped down a little bit more afterwards. But again, on a news event like this, there's always the possibility of that severe retracement. And at that point, being up 12, 13, 14 points, it's just a good idea to take it, I think, on something like this and then reset. The whole thing collapsed anyway. This entire move from this morning all the way back down to where it started, we're right back where we started. We're right back inside of this previous range of consolidation. It's time to wait. There's that range of consolidation again that I was talking about this morning. And now it's time to wait and reset and look for another opportunity. So we earned approximately 92 to 93 pips today with these trades using the trade copier. We can do the same thing. So this is how I trade the news. Very often I can see the signal. So this morning, before the U.S. economic data was released, I could see that price was setting up the possibility of trading that fade the 00 move, which put me into the trade going up on the euro dollar and to sell it on the dollar Swiss. And then it was just a matter of waiting for the FOMC just a little while ago to then short that. And then at that point, you can see it's obvious that it was going to return right back to the level that it started off or pretty close to it. It happens. It doesn't happen every single time. But with the data that was available and the way that the market responded to FOMC, you could clearly see that was just going to bring it right back to where it started, taking into consideration the distance that it covered this morning with this morning's move after U.S. economic data. So if you'd like to use the trade copier, it really can be this easy for you. You don't have to execute any trades. I manually execute all of these trades for you. All of these trades will be executed and opened and closed in your MT4 account. You don't have to do anything. As long as you leave your MT4 account on a VPS service, you're never going to miss the trades. And again, I can't guarantee that I'm always going to have a trade at the exact same time every single day. It doesn't work like that. At least my strategy doesn't work like that. And I don't close the trade just because so much time has passed. I use very specific entry points, price points that I see here in the charts, and then I target very specific take profit levels that repeat over and over and over again. And I just do the same thing over and over and again. We haven't had any losing trades in months. And again, we cleared over 92 pips today. So you can do the same thing by using the trade copier. You don't have to execute any trades. I do the work for you. Thanks for watching this video. I hope that you made good money today. There was a really good opportunity to make money. It's perfectly okay. You know, sometimes when you see a good opportunity and you're sure about the move up, but not too sure about the move down, that's understandable too. You know, in time, you'll get the hang of it. If you're new to trading, you'll start to understand exactly how the market reacts to things, and it'll make it a lot easier, and your confidence level will increase. But certainly use the trade copier, and I'll be executing these trades for you. Again, no losing trades in many, many, many months. Obviously, I expect that I'm going to have a losing trade, but even on a trade like these two this morning here, if I would have experienced a loss, it wouldn't have been more than maybe 20 to 25 pips as a loss, and that's extremely affordable by anybody's standards. So thank you again for watching this. Good luck trading. And if you'd like to use the trade copier, go ahead and click the link below this video or anywhere on the website, and you can get started right away. It's really easy, and we can help you with the installation.